strategy that can be used when trading with the RSI is to implement what is called a swing failure approach. For example, if we look at this chart, the market reached extreme prices and the RSI entered into the overbought level here. At this specific situation, price made a high here, then came down slightly, but then continued to form a new high here. Note that the RSI only entered the overbought area here, corresponding to this high here. However, when we look at the price high here, at that time the RSI did not re-enter the overbought area again. The RSI failed to enter this overbought area, and once it breaks below this low here, that is known as a complete failure swing, and furthermore a sell entry can be taken here at this point when prices breaks this low here. A stop loss can be placed above the swing high here, and a profit target at new lows or at a point of tolerance. Let's look at a long setup using the RSI swing failure approach. The RSI has entered the oversold level here, and price has generated a low, then retraces back up slightly, then forms a new low here. The RSI has not re-entered the oversold area here. Therefore, at the break of this high here, a trader can buy the market right here, enter a stop loss here at the previous swing low, and set a profit target at new highs, or at a point where the risk management ratio is in their advantage. Using trend lines to trade with the RSI is also another strategy. For example, instead of the typical approach to drawing trend lines on price, we can draw the trend lines on the actual RSI itself. For instance, here we have connected the lows of the RSI, as you can see. At the point when the RSI breaks below the trending, we can enter a sell order at this price point here. A stop loss can be placed above the most recent high here, and a profit target at new lows. For a long, we draw the trend lines here, connecting the highs, waiting for the RSI to break above the trend line, then buy. A stop loss below the swing low and a profit target at new highs. This technique can be used by scalpers on a 5-minute chart, day traders off an hourly chart, and even long-term traders off daily intervals.